Alpari. But before I bring in Michael, let's quickly check with the money and FX market marks from Friday. Interbank lending rates ended the week marginally lower. We saw core money closing at around 11.7%. Now, for the secured open buyback instruments for the banks and discount houses, rates closed flat once again at 11.25%. Now, at the currencies arm of the market, the naira, after several sessions of losses against the dollar, ended the week firm against the greenback, closing at 156 naira 61 kobo to the greenback. Now, this morning, we're looking at, of course, the currencies market, and this time we're looking at more technical tools for trading at the currencies market. We're looking at oscillators as a tool for technical market trend. Michael Akinwale is here to give us more on that. Good morning, Michael. Sorry, I had to slip over with your name. We're looking, of course, before we go to the nitty-gritty of the technical details, let's quickly look at the general the market outlook. The major news this morning, of course, the euro debt crisis is still there. We're still talking about the euro debt crisis, but this time around, the European leaders are talking about boosting the euro bailout fund, or rescue fund rather, which is worth about 440 billion euros.
Yeah, basically, last week, I think traders, for those traders who were right, traders made a lot of money. Basically because we had a rally we've not had throughout this year. We had currencies like pound USD making at least gone down about 1,000 pips, basically. So we've been having this strength in the dollar. And I think the strength of the dollar is basically because of the weakness in the euro. So a lot of people are beginning to shift their asset to the US dollars. And if the Eurozone is not able to come up with a solution to the Greece issue, we don't see the euro coming up with any serious strength, anytime soon.
And Bonilla, I think it was last week when I had Esther Oyana here. I think she did mention that the euro was able to rack up some gains.
Yeah, but
during the week.
That was so many times some of those rallies are technically driven, because when the market moves down a trend, there's what we call rallies. It retraces upwards and it comes back down. So fine, it was like if there was a little rally, but compared to the trend downwards that we had on the Euro USD, for instance, the rally is I don't think it was up to 30% of the trend. And before, on Friday, we had the price actually falling back down again. So basically, it's not like a trend. It was just a little market reaction to some of the news that was coming out there.
Okay, so we could safely say now that the competition right now, or at least for now, is between the euro and the dollar. That's options for investors. Is either they...
No, not really. For instance, I love the analysis I'm planning to do today. I'm doing it with Canadian Japanese yen, for instance.
Okay.
We've had, the Japanese yen being very strong against the Canadian dollar, for instance. And we have the dollar also very strong against the Canadian dollars. So many times when you see the dollar strong, you see the yen also. Although it's not as if the yen is stronger than the US dollar, because we also have the US dollar being right now strong across board. But
the yen has always is traditionally known as a safe haven currency. Investors, no matter what happens, the yen is always a safe haven.
Yeah, basically because the Japanese economy has proven itself to be very consistent over time, and so a lot of investors eventually moves their funds there in the currencies market.
So this morning, the dollar has a floor this morning.
Sure, but people are looking at that trend coming back. But basically, if you check it on the technical side, we have looking at chart patterns like double bottoms or double tops, which have been formed around all these trends. So if price is not able to break its current high, we'll see price actually retracing backwards, downwards again. For instance, for the Euro USD that's been going down, we see it going back up. If price is not able to break the current support.
Okay. Yeah. All right, let's get right down to business. In the last couple of about 2-3 weeks now, we've been talking about a lot of technical tools, very technical, I must say, graphs and all of that. And today we're continuing. Today we're looking at oscillators as a tool for technical market trend. It's still all about tools for the market forecast. Now, just give us a general idea of what it is or what it's about. Okay,
before I actually even go into oscillators, let me just try and add some of these things together.
Okay.
Because it's very important that people understand why, where all these indicators come in. When you run a company, for instance, a company is a combination of systems that are working together to achieve an objective. When you have a car, it's a combination of systems working together to achieve an objective. In the same way, when you're trading, you bring together different tools that are measuring different parameters, for you to actually build a system that makes you make trading decisions, basically. So we've talked about candlesticks, which is actually about chart patterns. We've talked about moving average, which is one of the most basic technical tools. Now we're looking at oscillators. They are all measuring different parameters in the market, like that. And when you look at oscillation from, basic secondary school term talks about something that is going up like that, you know, up and down, like a vibration. So that's what an oscillation is. And if you look at, you know, whether you're looking at business, whether you're looking at the weather, you notice that in life generally we notice that things go back and forth. Things go back and forth. That's sometimes they'll tell you there's nothing new under heaven because everything seems to go back and forth. Okay. So that same concept affects the currencies market. Let me give you a case scenario. In a place like Dubai, for instance, where they have is a tourist center, even though it's a tourist center, they have periods where they have peak bookings in the hotels. For instance, during the Christmas period, they have the peak summer period. You have the peak period. So in the same way, they have like an oscillation in the market. Okay. So you can actually say during this period, you know, let's actually go, you know, put investment in hotel. Why? Because in that period we're going to get a trend. So in the same way in the currencies market, an oscillator is a tool, you know, that helps you to know those peaks. You know, where the market is going to peak, where it's going to bottom, where it's going to peak, where it's going to bottom, because the market also vibrates.
When you say peak, bottom, are you talking about peak in terms of gains, losses? What does?
Yeah, well, if, for instance, if you're on the buying, for instance, you know, when in the market, people are either buying or selling. Now, let's assume everybody is buying. There comes a time when, you know, the buying momentum stops, then price starts coming down. At that point, we can see price has gotten to a peak. Then it comes down again.
As far or as high as it can go.
Yeah, as far as it goes, based on the buying strength.
Okay.
So when we see the price coming down again, after some time, it gets to a point where it bottoms. You know, so you can see that consistent oscillation, you know, graph sort of in the market.
Now, well, I wish we could see an example of that, but of course we're still working on the charts, and we would have them up as soon as we can. Now, okay. Some people might ask, even some of the traders themselves, that I have all these tools, I have fundamental analysis, I have a candlestick, I have moving average, now I have oscillation, oscillators. Isn't that one too many, or is it that one can just pick 2 or 3? Let me use this today, or let me, you know.
So many times as in trading, because you are measuring different parameters. For instance, if you go to a doctor, for instance, and he's testing you for malaria.
Okay, we do have one of the slides up now. Michael, what are we looking at here? Okay,
we're looking at an example of an oscillator in the currencies market. Okay. It's called the relative strength index. You know, you can see fine at the top there, looking at those red and purple blue lines. That's the market itself. That's the currencies market. But at the bottom, you can see, actually made that place very big. You can see that we have this green line going up and down. Yeah, that's called relative strength index. So you can see that it has tops and bottoms, tops and bottoms.
I think doesn't this look a bit volatile? Like, you know, there's no, I don't know, well, maybe it's normal. Is that
normal?
It's normal.
Because you can see that, apart from those green lines, you can see there are 2 horizontal lines there. Okay. You can see those 2 horizontal lines. You know, when prices are above that top horizontal line, you know, we can see that price at that time is at the peak. When price goes below, we say that it has also bottomed, you know, at that place. So that's the typical market oscillator that we're looking at. Relative strength index, I think that was one of the major ones that market analysts use to determine support and resistance levels, or where price is picking up, bottoming. And
this is also one of the graphs, or you know, that you teach, that Alpari teaches students.
Sure, because you know, let me give you a case scenario. When you're trading, you want to determine the trend. At the same time, when you're in that trend, you want to know when the trend is over. Because it's also important. It's like having a car that can speed but cannot stop.
Okay.
You understand? When you're trading and you're following a trend, you want to know when that trend is over. That's where the oscillator comes in. It tells you when the market has peaked. So in the same way, when we had the downtrend of last week, for instance, after a point, we had where price became oversold, where it was bottoming. Then the relative strength index will tell you that, okay, now price, even though you were selling and you're making money, it's time to go out. You know, basically, that's what it does. That's what it works.
So is it possible to determine or predict where the trend will go, if we've seen it going up for a while, or maybe a day or 2 or so?
Sure. Then
like using historical evidence or something?
Historical data, you know, because so many times, fine, you're using historical data to determine.
Okay, this is something, we're looking at something else here.
What? Okay. This what we're looking at right now is the way the oscillator works. Okay. You can say I have buy and sells there. Okay. You know, what you want to do when you trade is that you're buying at the bottoms and you're selling at the tops. So you can see those arrows showing, pointing up and down. Those are places where traders will buy. Those are places where buyers will sell.
So if sorry to cut in here, if I'm a trader and I'm looking at this an education that requires me to be able to identify a sell and a buy. So of course at that point I should buy as a trader.
You should buy. But you know, I'm just trying to show here is that if you look at that same point where I have the arrow, for instance, for the first buy, if you're looking at your left side here, when you have the first arrow showing buy, you will see that at the same time you see the price was oversold. The relative strength index was at, you know, at the bottom, you know, showing that that trend that was coming down is getting weak, and so it's going to go up. So traders will buy. After that, you see the next arrow was a sell. You know, at that same point when you had a sell, you can see that our little trend index was overbought.
This suggests that one has to have very, if I can use this word, very trained eyes to be able to, because of course on the live trading platform we won't have things like buy, we won't have those words say buy,
but immediately it's like learning a language. You know, if you're someone speaking Chinese, do you ever believe you can speak Chinese? It's tough. You'll be like, wow, I can never speak this. But if you spend maybe a year or 2 years in China, you speak Chinese. What I'm saying basically is that if you spend like 2 months, 3 months looking at the charts, this becomes, you know, very easy. And you can immediately look at it. Nobody needs to put overbought, oversold. Then you just see it by yourself.
And know instantly what to do at that point. Because I was asking Esther when she was here last week about being able to identify this thing and what you guys, if it's part of your program. She said yes, like part of the basic and advanced. And I said, so it's actually possible for one to learn this, because I know your basic courses, I don't know how long.
The basic course is for a week.
A week.
Yeah, you know, at least after that week, one should be able to understand a lot of these things. But most importantly, you actually, you know, get to see them more when you practice, you know, and you trade.
Okay, can we see, have we gone over the typical example of an oscillator indicator using currencies trading?
Okay, let me give a case scenario. If you look at this trend we had last week, you know, maybe the chart will come up now. Okay. You know, I wanted to combine a combination of the moving average we had the previous week and the candlestick thing, and see how they relate together. Now, the trend we had last week that was talking about, that said the dollar was very strong. There was a moving average cross first. At that same point when you had a moving average cross, you know, okay, look at it. You can see those two lines on the graph. You know, the green line and the purple line on the graph. Okay. At that same point, you can see that there was a cross downwards. Then most importantly, you can see at that same point where we had a cross downwards, we had this overbought level there. Okay. Can you see that? Okay, that overbought level shows that, okay, price was at the high. Then at the same time, our moving average was crossing downwards. So we should sell. So this was the downtrend we're talking about last week, you know, where we made a lot of profit. People who actually when sell trades, you know. So basically, that's where you combine all these tools together to make a trade decision. Okay, Michael, it sounds a bit complicated, but I'm sure you, of course, will make that more, you make it easier than it looks. I was speaking to Michael Akinwale, a currency analyst from Alpari, and we're looking at oscillators as another tool, market tool to help determine market trends in the market. We'll take another quick break now. We'll be back with the rest of the program. Please stay with us.
There's a new way to now invest that allows you to diversify your portfolio.
It's Forex, the global market for foreign currency trading. A market in which the world's leading currencies are traded 24 hours a day and 5 days a week.
Now, to take your Forex trading strategy beyond borders, Alpari is the platform of choice,
in which you can trade Forex with professional guidance until you become a seasoned trader.
Alpari also provides free training seminars for both beginning and seasoned Forex traders 4 times a week, explaining complicated things in a simple way to make Forex trading comprehensible to everyone.
Call us today on 01-821-8274 or 080-3457-3593 or email us at nigeria@alpari.org or visit www.alpari-forex.com and experience dependability and innovation in online Forex trading.
Reporting politics is not as straightforward as you might imagine. Most times, what is may not just